example. And if you recall, on Telegram, I sent out a short for gold, and it was very on par with our price action strategy. We kind of created a range between 1464 and 1459, and so we had a kind of a fake out on gold, and we had price close back below our range, and it was printing these inverted hammers suggesting that we're going to go lower. And so what had happened was that instead of going immediately lower, it did do a slight pullback, which is fine. But if you look at the candles I was printing, and if you look at the next, and we're on the hourly time frame, the next 7 or 8 candles, spinning tops, mini hammers, dojis, just no volume, just a bunch of consolidation. And if you're accustomed to our strategy and you've been with this for quite some time, usually our trades have very little drawdown, and they're usually done by a day or two, or the initial movement is considerable, right? And so this stagnation in volume and consolidation really set the alarm bells ringing in my head. And I told you guys to get out at, I think, -5 pips. And thank God we did, because over time, through the London session and today morning, we would have gotten stopped out, and that would have been a -70 pip loss. So how do you know when to get out of a trade? Part of it is on your trading strategy. So since our trading strategy is very simple, and we trade price action and we trade candlesticks, and we trade within ranges, we know that once price starts consolidating after coming back into a range and it's showing a lack of volume, especially for gold, and I've said this before, if gold tends to consolidate, it's probably going to do an impulse move in a certain direction. And we can see that happen here, a considerable impulse move when it looked like it was going lower. This is what burns a lot of newbies when they trade gold. So this goes for any pair, but gold was a trade we took yesterday, and I thought it'd be a perfect example. Another thing is just experience. Over time, when you spend time on the charts, you're going to get accustomed to knowing when to get out of a trade. It's just a kind of a second nature, a sixth sense if you have it. And that just comes with experience. You can't really cheat the system or cheat the game. Once you spend that time, over time, you're just going to realize that certain pairs have a tendency to do this, and a certain move does not look correct. You get out, and thank God we got a gold. We cut our losses short, and so that's how you know when to get out of a trade. And practicing on a demo account, if you're not on a live account, kind of this sixth sense is what's going to really improve your trading game, because it's one thing to know when to enter a trade, it's another thing to know when to get out, and those are the two most important things when it comes to trade management.